Hello traders, Day Trader Matt here, and this year 2017 I've been doing an experiment, and the experiment was basically started with a lot of my coaching students. I was teaching them different strategies and whatnot, and they were like, well, what can you do with this? And it's easy to take a $100,000 account and make money with it. So I decided, why don't we start a small account and turn it into something. So right now, today is the 27th of December, and our current value is $3,936.22. This is the account number. This is TD Ameritrade, and I want to go to transfer funds so I can actually show you how much we actually put in here. I can tell you, it doesn't really matter. But anyway, this is the account number here. My name is Matt, obviously. And there's no recurring transactions, no pending transactions, cash available for withdrawal. We can look at that later. So on the 8th, on August the 1st, 2016, I put $55 in. I'm not exactly sure why I did that. I think that was probably trying to get into a drip stock, which is basically a stock that pays a dividend that you can join a program, which they call it the dividend reinvestment program, and I like that, or the dividend reinvestment plan. I think the P is kind of subjective because I've heard it referred to as each one differently, but it doesn't really matter, the terminology. So what TD Ameritrade will do is you can buy a stock that has a drip available with it, and it will actually allow you to enter that plan, and you can do it through TD Ameritrade, which is actually kind of cool. I can talk about that a little bit later actually, and the strategy that I set up for this particular account. So the main money, November the 14th, 2016, I put $1,500 in. So if you want to look at it, $1,555. You can look at it like that. That's how I'm going to look at it when I talk numbers. So $1,555 we put in. Pretty much I didn't do anything with the account until November started, and we're going to talk about that. But this is basically what I did. I put in that much money, which is a good start. But I see so many people starting with small accounts and just blowing them up because they think that they need to go from $1,000 to $20,000 or $1,500 to $30,000. Which is insane to do in a year. Like, how are you going to do that? Yeah, we've seen people do that with Bitcoin recently because that's a market that's just taken off. But other than something a once in a lifetime type of thing, or once every 100 year type of thing, you're not going to see stuff like that. The normal trade, you're not going to buy a stock and it automatically just make you a millionaire. It's not going to happen. So let's talk about a little more about what we actually did with this account. So $1,555 we put in. So let's go to, alright, there it goes. So this is basically the account here, and let's go to, we can look at the gain loss, and that will show, if we go year to date, that we've basically made $2,536.95 year to date. And year to date obviously means January 1st to December 27th. We made that much money. So if you want to look at it with a calculator, we put in $1,555 plus $2,536.95 equals $4,091.95. Obviously that does not take in commission. So we spent over $200 in commission, which takes us down into this number here. So we actually have, obviously we have a little bit of unrealized gain in our portfolio, which that's what that tells you, obviously. What I wanted to talk about with the drip, just because that's something extra that I started talking about. So with this one, HCN, which is Welltower, you can buy this and join the dividend reinvestment plan, and that's why I have 1.037 shares right now. Or Exelon, right here, I bought into that. These pop-ups would not just stay there, and that's why I have 1.008 shares of that. I bought into these this year. Obviously, we've done the majority of our work this year, and that's what I wanted to show you guys, that you don't have to do something crazy. And let's go back to gain loss so you can see how many trades we actually did this year. So if I scroll down and you look, and I've counted this out, we've actually done less than 50 trades this year. So during 2017, we've made this much on our $1,555 investment, and I bought into 2 drips. So I wanted to lay the whole strategy out. So basically, this is going to trade the way that I trade, but I'm using options. I'm using options predominantly, and then every time I make a little bit of money, I will start buying into these 2 drip plans that I started. And eventually, as the account grows, it hits a certain threshold, and I buy into a drip stock. Hits a certain threshold, I buy into a drip stock. Now these 2 stocks that I have, let me go to them again. I wish it was a little more user-friendly, hopping back and forth. But this one, it doesn't really say anything about it, does it? It pays about a 4% dividend, and that's what I'm trying to find right here. If this tells what it does. Obviously, I don't spend a lot of time on Thinkorswim or TD Ameritrade. I use the Thinkorswim platform. That's what I use on my phone and on my computer. Obviously, all the work that I do is on the computer, and if I'm buying or selling something on the app, I've already done the research on my computer, so I already know what I'm doing, and all I have to do is wait for my price, and then once it hits my price, I can go ahead and make a trade. So this X dividend here, annual dividend is 3.38%, which is not a lot. And you might look at it and say, well, that's pretty bad. Why are you investing in that? And HCN is 5.48% per year. And the reason why is because they're strong companies, and I feel they're going to be around 100 years from now. And they're going to go up in price. The dividend yield is going to stay about normal, might go up slightly, but I feel confident that that's going to be a good space to park money. So as I grow my account, I'm able to park money. There was a great trader on Wall Street before my time, and what he would do, he was a day trader, and obviously day trading is my roots, but I've expanded past that, and right now I feel this is one of the best strategies out there, is to be able to trade options consistently. You're not going to make a ton of money, but you could turn a $1,555 account into $3,900 plus in less than a year, or a year, or 12 months, or however you want to look at it. And that's a nice gain. That's over 100% gain. That's just pretty sweet. But what this guy would do is whenever he would trade in the pits, he would make a certain amount of money, and then he would take a portion of that and put in bonds. Then he'd go back into the pits, make money. He'd take a certain portion of that money, put it in bonds. And then when he retired, he had so much money set aside, and he was good. And the reason why he did that is because so many traders nowadays, so many investors, traders, it doesn't matter. Terminology is subjective. And yeah, you can argue that, but it's really semantics. Like, doesn't matter. I don't care. And you shouldn't care either. It's semantics. So what a problem a lot of people have is they'll make a little bit of money, and then they're like, oh, I'm making money, this is so easy. And that mentality is horrible. That mentality is usually when you go wrong, blow up your account. And he was seeing people do this. You know, you might be up 400 grand, and then boom, you just lose it all being stupid. Not that they are stupid people, they're very intelligent, obviously, but smart people can do stupid things. And just because you do something stupid doesn't mean you are stupid. And that's what these people were doing. And he's like, wow, I don't want to do that. And, you know, I have a family. He had some kids. I don't know how many. No idea. But I know he had more than one. More than one child. He had a wife. And he wanted to make sure they were okay. He wanted to make sure he was okay. And that's the strategy that he did. And this is a similar strategy to that. But instead of putting it in bonds, I picked some stocks that I really believe in that have a drip plan that I could join through TD Ameritrade. And that's what this is. I didn't want this to be about that. I wanted it to be more about this. But, you know, as I'm talking about it, I felt like might as well talk about everything. And just to give you a little bit of insight, so let's take this number right here, 39, 34, 20. Yeah, it's gone down a little bit since I've been talking. So maybe I should talk less. So if we subtract this, 1555 was our opening account, which is 2379.20. And then we divide that by our opening account number, and that's what we get, 153% return, which is not bad. And that was all in 2017. Pretty good. And even if you want to look at it in 12-month period, good return. 15-month period, phenomenal return. Even 2 years, you know, people would kill for that type of return over a 3-year period. So, just saying, hopefully you enjoyed the video. You got something out of it. I expect questions, so if you have any questions, ask them below. There's no such thing as a dumb question. You know, the only dumb question is the one that's not asked. If you have a question, ask it, because I can assure you that question is on other people's minds as well. So if you're bold enough to ask a question, I do applaud you, because it does take a little bit of boldness, because you're coming out of, you know, the digital obscurity, which is the internet, and you're actually putting yourself out there with a question. So I do applaud you there. You know, if you're watching this video, if you enjoy it, please click the like, thumbs up button, you know, whatever it is on the screen. Ask questions. Thank you very much for watching. Have a great rest of your day. Have an awesome Christmas, New Year's, holiday. With that, I'm talking to you in the next video. Thank you.